Well, in our last video, we were talking about goal setting and financial planning at home. So I want to talk about the second step today. Now, we have these great goals because we started our planning. As I said, we're going to work backwards. We know where we want to be. And now we've got to look at where we are today and where we're starting from on the map, right? A to B. Now, to do that, and we have these wonderful goals we've come up with, is we need actual money and cash for this. So how do we accomplish that? What we need is a budget and cash flow. We got to see what's going on today and how we can achieve those goals and put our money towards that, and what are our habits and what's going to go forward. So today we're going to talk about cash flow and budgets and a little bit about net worth or assets and liabilities. And I'll show you a few tips on how to do that. So let's get right into the video. Once again, my name's Aaron and welcome to Cozy Financial Planning. So first and foremost, we're going to look at the basics of this, which is cash flow. And on the screen, you can see it's pretty straightforward, a little confusing, and the black part is just, I used my recent old material that I had from a company I worked for, and I just took out their name, because work smarter, not harder, right? Anyway, so cash flow management system is you're going to take your total income, you're going to minus your fixed expenses and your variable amounts. Now, basically what those are, so you understand. So the total income is after all deductions, what lands in your bank account after payday, and you're going to probably times by 2 for roughly a month. Per month is what you're going for. And so your fixed amounts or fixed expenses are stuff like stuff that's not going to change. So your rent or mortgage are not going to change on a regular basis, right? They're not changing per month. They're changing maybe annually. Property taxes if you own a place, car insurance, car payments, certain debts, stuff like that. And then your variable amounts are stuff that you can fluctuate. So subscriptions, entertainment, some groceries type of stuff can be there too. And so how this breaks down is you take your fixed amount and then you pay all your bills, as it says, you go into an account, and then your fixed amount goes into this money market fund, and then you can divvy it up there. The money market fund was just an extra step kind of to control or manage more money for a client, so you had more things coming in as an advisor. You can kind of skip that and use a savings account, but a money market fund is not terrible. It just takes an extra day to get it out or so. And then your variable amount, right? You go to your cash account, you're spending money, which should be all your money, and then your overflow amount into those things, and then you itemize everything on the side there in all the orange, right? You have investments, vacations, so more short-term stuff, vacations, cars, anything like that. And so how do we do this, or how do we get to this, and so we can kind of deviate and put it towards your goals? That's kind of next. What we have here is couple budget worksheets. The one in the background is a very simplistic one. It's just itemized. I have one on the sheet. I'll show you the one I like to use. Now, and then the other one is more advanced. It's an Excel sheet, so it's for a year budget. It's an annual budget, and it's just an example. They're not real numbers. And the Excel sheet obviously do all the calculations for you. If you set up the formulas, it's very extensive. It's however what's best for you. I personally think the first one is just easier to use for most people, especially if you're starting to do this for the first time. Now let's talk a little bit about budgeting and what we're going to do with these sheets. We talked about the cash flow, how much is coming in and what's going out. You need to do this. Now, as an advisor, when I was talking to clients, I was really nice about things, saying, oh, you don't have to do so much. And so I very much like to be positive instead of negative, but you need to stare this in the face. A lot of conversations turned out at dinner tables or dining tables were, oh, I don't want to look at that. I don't want to look through my expenses and see how much I spend. But we really need to. If you want to take on financial planning seriously, you have to look yourself in the face. Now, the beauty part of that is it's just you, maybe a spouse or a girlfriend or boyfriend or someone, or partner. But you're not talking to your parents, you're not talking to your doctor, you're not talking to your friends. You don't have to talk to anyone else about it or share it. It's you and your personal finances, right? So you just have to look at it. So you have to be very honest with yourself on this case for these type of thing. Now, how do we do this? I recommend do a 3-month look through first before you even start with these sheets. I think you should do a 3-month look through. It'll give you a better idea of averages as you go forward, because every time there's a month, maybe we have some holidays, maybe you spend a little bit more for your significant other on Valentine's Day, then you have Christmases in December, stuff like that, right? So things are always going to fluctuate. So 3 months will give you a better idea of your spending habits. 1 month is solid though, and this is because we use cards or debit cards often for purchases, so you can track all your stuff is already tracked, right? Makes it easy. And so what you're going to do is you're going to write out, I believe everyone should do this, and I do this too, is you go through your expenses, what you've paid money for, and calculate them in each category, right? You can use the budget sheet to break that down, but you think you don't spend a lot of money on, say, Tim Hortons coffee or subscriptions, but quickly adds up that you have Prime, Netflix, Spotify. What else can you have? Disney Plus. You know, there's $40-$50 a month just on that. Then you have maybe a gym membership, and you add up a lot of different things, and you're like, holy crap, I'm spending $100, $120 a month on this stuff, and maybe you don't need to. Maybe you can do something like rotate your TV subscriptions, right? You don't need Prime all the time. Maybe you don't need Spotify. Like, you can change it. Again, go through your expenses. Tally up how many coffees you have, how many times you eat lunch, how many times you go out. And then we're going to move forward onto the next step once you've kind of figured that out. And then you want to put all those numbers into these kind of budgets, right? So what that looks like, this is kind of basic one I did up really fast and I just put the pictures up, is you want to do your cash flow at the top, where it all comes from. And then you have all your expenses, and then you'll do a quick calculation. I just put there, so you do your, like, what your cash flow really is, right? So you take your total income, if it's $2,000 a month, just for easy math, your fixed expenses and your discretionary expenses, let's say, are $1,800. You have $200 left over after everything should be accounted for to have extra money for your goals. Maybe your idea, if you look back at the old video, was to save $500 a month for a house. Well, how are we going to do that if we don't have cash flow of $500 extra after everything's paid for? You have $200. So we have to look at this, right? And we have to work on it and maybe make some adjustments. I'm very adamant about not making people drastically change their habits, because I don't think it works in the long term, and most people's personalities are not to do that. You have to modify habits and build habits. That's why, a side note, when I talk to young people, just build a habit. Put $25 a month away, $50 a month away per period, whatever it is, and just build the habit of saving money and not having it, right? That's really what financial planning is. One of the foundations is building a habit. So when we talk about this, we want to look at this. So maybe you spend $1,000 a month on entertainment, right? Going out, movies, whatever you do. I'm not going to tell someone, well, carve that down to $100 a month, because not taking that's a drastic lifestyle change, and they may not be ready for it. However, we can probably shave off $400. Maybe you need to spend one less night out drinking, one less movie night out at the theaters because it gets costly, one night less, one day doing something different. Pick and choose a little differently, right? Once per week kind of thing, and maybe it's $400 less or $300. But I do think you need to make a big difference. I think you need to make a sensible change. Just saving $50, say, oh, I'm only gonna eat one less, so still spend $950 instead of $1,000. That's not gonna really achieve your goals. You have to shave off more, so maybe $300, $400 for a period of time, and you can kind of modify things from there, right? And the last thing, good old AI helping me out, is assets and liabilities. So once this is all done, I also want you to sit down and do a T-chart, simple T-chart similar to that. Write down assets on one side and liabilities on the other. If you want to take an extra step, you can put liabilities and look how much you spend on each liability in a little side pocket instead of just the chart. You can do both. That's just the basics what you really need to do to start, in my opinion. You can also write down your insurances, life insurance, critical illness, disability insurance, just through work, stuff like that. It is good knowledge to know what those are, and then you can just write down if you have a will or power of attorney is done, because the part of financial planning is estate plan. But just be good to check that off and just see if you have it or not, if it needs to be looked at down the road. Now, for your assets is anything cash value, cars, if they actually have real value, like antique cars, stuff like that. Even your current vehicle, it's worth something. They're depreciating assets, so a little toughy, but you can put it in there. Artwork, jewelry, coin collection, stamp collection, stuff like that, if it's worth actual money. Anything with cash value, if you have a life insurance policy that has a cash value, the cash value would go in assets, and the liability, you have to pay it. So if you're still paying for life insurance, you put it there. Now, once this is all said and done, we're going to go through another video on how it would actually give you some financial planning tips on what to do on a case like this. I'm going to use John and Jane Doe. I'm going to make up some numbers for a presentation, and you'll see kind of how this should look and what you can do to increase this, because you're gonna get stuck. The first point, the important part is that once you do the budget and the cash flow, and then we're gonna look at the next video and how we can increase that to help you achieve your goals. Because hey, maybe you're really good though, and your current cash flow allows you to achieve all your goals, or you just got to put it in the right places, and that's a fantastic place to be. Not everyone necessarily will be there, so we have to make other modifications for it, and that's what we're going to talk about in the next video. As of right now, I want you to do the next step. This is why I call it kind of 1.5. It kind of goes with goals and goals and desires, I guess. With your goals is you're going to want to be here. You need to look at where you are today to see how you get to there, right? So you kind of do it together. We'll call it step 1.5, 1.75 if you like, or 2, and go from there. All right? Now, with that said, thanks for watching. Like, subscribe, or comment, and can't wait to see you in the next one.